Now that we have covered what a picture-perfect pattern is and also how to look for that pattern using the Commitment of Trader report, and we've looked at the large trader proxy index, I want to now go from the setup of a trade down into the entry of a trade. So we're going to do that by first looking at a bond chart here. This is on a weekly basis. Notice that the bond weekly chart shows bonds are in about the same price level here as here. We don't know if they're going to rally or not at this point, so we look to see what the commercials are doing, and we see using the red line, that's the half-year look back, or the blue line, that's a 3-year look back, that the commercials are very bullish in this price point, just as they were back here. They're supporting this price point. Once we get back into the same price point again, they're bullish in the marketplace, and of course that tells us that most likely we should rally to the upside in the market. Because of the bullishness by the commercials defending this price point, we expect bullish action. Now, if we look at the large trader proxy index, we see it's been in a downtrend, and we're looking for a buy signal. So we're going to go from the weekly charts next to the daily charts. Well, we've gone from the weekly chart of bonds, seeing the market is set up in a picture-perfect pattern, now down to the daily time frame in that May and June period of 2004. A couple of things I start to notice. A large trader proxy index, that's at 130 days, or about half of a year, has actually started to turn up. That's the blue line that's getting above its moving average, telling us the large traders are getting into this marketplace as buyers. And of course, they're the trend creators, so that intrigues me a great deal about the marketplace. I want to look for an entry. I see large traders are buying, and the commercials have defended the same price point they defended earlier. It is a bullish setup in the marketplace. So I can then just take a simple qualified trend line. I have a ringed high here, a ringed high here, down close. There's one entry right there. If I didn't notice that entry, here's a real clear one to see. A short-term high here, draw a line across, down close, and we get up above it. There's actually another one in here I'm going to show you. We have a short-term ringed high here and here, so you can draw your trend line coming down. We have a down close, so we can be a buyer, and you would have bought on this large range day here. Notice that's exactly when the large trader proxy index turned to the upside as well and had been starting to round the corner. So this is what I like to see in a market that's set up, see that there is a trend change going on by the large trader proxy index, and we're getting a trend change entry, in this case using a qualified trend line. Then it's just a question of where to get out. You have the exit tools, of course. You have the target shooter. You have trailing stops and protective stops, and you probably have some tricks up your sleeve yourselves to use. But you can see an entry, but it's really based on the power of the entry is based on the setup from the picture-perfect pattern as you saw in the last clip. So there's a good example of starting from a weekly chart, looking for the setup, looking for the picture-perfect pattern, then coming down on a daily time frame, looking for the trend to be changed by the large traders, and then an entry off of the charts in the market from qualified trend lines or whatever your thing is to use in the marketplace. There you go. Setup and entry. Before we go further, I do want to go over the commercials time frames for you, just so you understand. On a weekly chart, if you're going to look at the COT proxy index or large traders, whatever it is, and you think it's an 8-week time frame, then you'd use 40 days on your daily chart. Now, most markets are going to operate on 13 weeks, 26 weeks, 39 weeks, and 52 weeks. And the vast majority of markets you'll find right in here will either be on a 13-week or a 26-week commercial time frame. So on a daily basis, you would then want to set your large trader proxy index at 65 days or 130 days, and that's going to set up your time frame for the various markets that you'll be trading in or looking for the large traders to give their buy signals in the marketplace. So remember, 13 weeks, 65 days, 26 weeks, 130 days. So now you know how to set your indicators.